Decentralized finance, or Defy, has been one of the biggest breakthroughs of the crypto world in recent years. Defy has emerged as a completely new way of getting finance, without having to go through all the difficult steps in the process. It has reached a point where banks and other lenders are starting to get worried about the growing popularity of Defy. Let's take a look at why that is. What Defy is. Decentralized finance is, as suggested by its name, completely decentralized in nature. But what does that even mean? Well, for starters, it's not bound to any bank, company, or government. Instead, Defy uses cryptocurrency and smart contracts to give people access to finance of all kinds. This includes loans, savings, trading, insurance, and a whole lot more. Getting access to Defy requires nothing more than an internet connection and a smartphone. But who even gives us this finance? Surely, if there's money that you're loaning, there has to be some sort of lender, right? There is. You borrow money from other people the same way you do with regular financing, but the difference here is that the process is mainly automatic. Defy uses smart contracts as a way to help people reach financing. Smart contracts are a feature introduced on the Ethereum blockchain. It allows programs that are running on the blockchain to be executed automatically when the required conditions are met. With the existence of stablecoins, which are cryptocurrencies that are pegged to a real-life currency, such as the US dollar, obtaining Defy loans is now more secure than ever, since you don't have to worry about the currency you're borrowing becoming worthless, eventually due to the volatility of cryptocurrencies. As we've mentioned, you need to meet certain conditions to obtain Defy. Now, what are these conditions? It really depends on what the source of your Defy will be. Smart contracts can be programmed in a multitude of different ways, and on top of that, their code is completely transparent. Anyone can audit a Defy contract to see if it's reliable or not, and there are a lot of online auditors that will do it for you. There have been quite a few lending protocols that have been developed for Defy purposes. The most popular of these are Aave, Compound, and Maker. All of these lending protocols allow you to borrow cryptocurrency almost instantaneously, and you can even borrow some rather large amounts. On the other hand, you can also lend your own cryptocurrencies through these protocols and earn huge interest profits in the process. That's not to say that Defy isn't risky. It's a very new concept, while traditional financing has been around for centuries in comparison. There are more than a few scammers looking to steal people's money with Defy apps and other offers, but that's the case anywhere you look. It's important that you do the right amount of research before committing to something like this, especially if you're gonna be the one who actually lends the money. But you know the saying, the higher the risk, the higher the reward. And with enough research, this risk becomes rather small. You wouldn't be the first person becoming financially free from crypto in just a year or a bit more. I've seen multiple people do so, and why can't that be you? This is perhaps a once-in-a-lifetime opportunity. Are you going to be the idiot that missed out? Or are you taking the risk and potentially being financially free in a few years? Click the link in the description to get started today. Difference between Defy and traditional finance. Before you can truly understand the impact that Defy will have on the world at large, you need to understand how traditional finance works and why Defy is so different when compared to it. Traditional finance is extremely centralized. You are bound to the laws that are set by the government, which can be extremely limiting at times. You are also bound to the rules that are set by the bank you're borrowing from itself, which can prevent you from borrowing if you don't have an existing credit history. In fact, it was the requirement of credit history that held traditional finance back the most. The vast majority of the youth these days don't have any sort of credit history at all, and building a credit score from scratch is an almost impossible task now, since the requirements are way more extreme than they were a few decades ago. This puts us all in a very precarious situation. How do we even build credit if no one is willing to lend us money in the first place? It's pretty much impossible to do so. Defy, on the other hand, is decentralized, and you don't need to go through any sort of intermediary to gain access to finance. You don't need to have some sort of credit score to obtain the finance you may need, since all you need to do is meet the conditions that are set by the smart contract. Smart contracts, as their name suggests, are a much easier alternative to just looking at a person's credit score and deciding whether you want to lend them money or not. There are very few barriers that are preventing you from entering the world of Defy, while in traditional finance, they've made the system in a way that the rich stay rich and everyone else struggles to make their place in the world. There is absolutely no distance between the lender and the borrower in Defy. Because of the lack of intermediaries, the finance is directly sent from the lender to the borrower, and the lender can keep track of almost anything regarding their money. The transparency of Defy is another huge difference the two systems have. You basically know all the risks, the requirements, and the gains you're going to make beforehand. With banks and other lenders, there's not the least bit of transparency. You can't just take a look at where your money is going, where it's being spent, and in some cases, the contracts you sign with the bank are littered with a bunch of legal jargon that's designed to keep the bank safe and screw you over. With Defy, you know exactly what you're getting. The potential impact of Defy. By the end of 2020, the Defy market, as a whole, reached a size of around $24 billion. This is no small sum, but it obviously pales in comparison to the trillions that are located in traditional financing sources. However, Defy is one of the fastest growing markets in the entire world. People are slowly starting to recognize the impact that this new concept can make on the financial industry, and by September of 2021, the Defy market had reached a size of over $85 billion. Just to be clear, this is still a tiny sum in financial terms, but the sheer pace of the growth, despite the market already being in the tens of billions, makes its growth almost unprecedented. Many are expecting the Defy market to be well above $100 billion by the time the year ends, although it can be a difficult task to actually monitor how big the market really is. It's quite likely for the market to be much larger than it seems right now as well. This begs the question, how big will Defy even get? Will it continue growing at this pace? What mark will it leave on the financial industry as we know it? Answering all of these questions is a bit hard, since no one can really predict the future, but if things keep going the way they are right now, the entire financial industry as we know it will have to make some major changes in the way it works. Eventually, the general public will become far more interested in Defy, and traditional financial institutions will start to feel a lot more pressure to make these changes. The credit system will require a major overhaul, and P2P services will become much more popular due to Defy. It's almost impossible for these big banks to fail, since the government will always bail them out, but it is possible to exert a lot of pressure on these banks. Eventually, Defy may just become a major part of the world's financial system overall. The system is still in its infancy and it'll probably take a while for it to mature, but when it does, the global system of financing will become a lot more equal, transparent, and accessible. Conclusion. So, at the end of the day, is Defy going to kill traditional forms of financing? Probably not. However, it'll, without a doubt, make an important place for itself in the world. It'll likely coexist with traditional financing means for the time being, but as far as the future goes, you never really know what direction it might take. Defy will also make cryptocurrency a much more viable alternative to traditional currency. No matter what happens in the future, this will surely not be the last time you ever hear about Defy at all. That's a wrap for what banks don't want you to know about Defy. Do you think Defy will eventually replace the traditional forms of financing in the future? Let us know in the comments below. As always, don't forget to like this video and subscribe to our channel for more videos like this. See you in the next one.